One stock in which I'm very keen to buy into is New Holdings. This stock is showing potential for great returns this year and beyond. In this video, I'm going to be giving you a rundown as to why I think this stock is a good stock to be buying currently. I'm going to be looking at their intrinsic value, looking at some of the news surrounding this stock. I'm also going to be sharing with you exactly what they do for the people that don't know who New Holdings are. Furthermore, we're going to be looking at what the analysts expect from this stock in the future and why exactly this stock is good for your investment. So currently on a year chart, we can see that New Holdings is up 43%, with them falling down from around the November period of 2024. With this being a pretty high point in their history, we can see that their earnings per share is 0.36 and their current PE ratio is 3.7. There is a lot of hype around this stock at the moment for sure, with articles such as New is attracting investor attention, here's what you need to know. For the current quarter, New is expected to post earnings of 12 cents per share, indicating a change of 50% in the positive direction for the year ago quarter. For the current fiscal year, the consensus earnings estimate of 42 cents points to a change of 75% from the prior year. And over the last 30 days, these estimates have remained unchanged. And for the next fiscal year, the consensus earnings estimate of 59 cents indicates a change of 39.9% in the positive direction. So who are New and what do they do? They are a digital bank. New Bank offers a digital banking experience via its mobile app with no physical branches. They offer credit cards, personal loans, savings and investments, business accounts and insurance. So why do they matter? What makes New different to a traditional bank? Well, they have a massive user base, over 90 million customers across Latin America currently. They have strong growth with rapid expansion into Brazil and other markets. They have a disruptive business model that competes with traditional banks by offering lower fees and an easy to use digital experience. And furthermore, they are backed by big investors, supported by firms like Berkshire Hathaway and Warren Buffett. So what will affect their stock price going forward into the future? Well, for starters, there is the interest rate environment. There is, of course, consumer and growth market expansion, with New aggressively expanding into Mexico and Colombia, where traditional banks still dominate the fintech area of the market. So if New can gain a dominant market share in these areas, it will significantly boost revenue. Of course, profitability and cost control will have a huge factor to play, as New has historically focused on growth over profits. However, investors now want to see stronger earnings, and their ability to monetize customers via lending, investments and fees will determine stock performance. Of course, there is the competition with traditional banks and fintechs. So to outperform their competitors, I think the only way for New is to just be completely different and offer completely different services compared to their competitors, such as lower fees, a better, of course, online experience in which they already tailor their platform towards. Of course, macroeconomic conditions in Latin America will play a huge role in New's performance, as inflation, economic downturns or currency devaluation in Brazil, Mexico, Colombia could impact New's customers significantly. And if consumer spending drops, loan defaults might rise, affecting earnings. Of course, having big investors like Berkshire Hathaway's and other institutional investors will definitely have a positive impact on this stock. As I said earlier, with Warren Buffett owning a large stake in the stock already, it's already on the radar of a lot of big investors now. And finally, New has integrated crypto services into investment options, which will allow for a larger range of products in which its customers can utilize. So on Yahoo Finance, what can we see for New Holdings? Well, they are consistently beating the earnings per share estimates. If we scroll down to the surprise rate, apart from in 2023 Q4, we have actually beaten all of the estimates provided by the analysts, and currently we are seeing a estimated growth rate of 34.54%. Furthermore, we are seeing revenue continue to grow really strongly, as well as the net income growing relatively strongly, obviously with them only taking profit in 2023. Sorry, that was an awful job at highlighting. There you go. So let's now take a look at my system and see what exactly we are seeing for this stock. What is the intrinsic value? What are these numbers putting out for this company? Is it a stable investment? Let's find out. So if we start on the left here, we're going to look at a liquidity ratio, which compares their total cash to their total debt. And currently for new, this is looking incredibly strong. Ideally, you want to see these numbers at least around 1. So to see it at 8 is currently really bullish. This essentially means for every dollar of debt in which they owe, they have at least $8 of liquid cash to pay that back in, which is incredibly strong. So now we're going to move over to the retention rate for new. So looking here, again, this is incredibly strong. You want to see a company around the 10 to 15% mark. So to see new consistently in the 20%, it is incredibly strong. So nothing to worry about here. This looks pretty good. And now we're looking at the free cash flow for new. This is where it starts to take a bit of a weird turn. Seeing the free cash flow in the negatives isn't ideal, but this will be used for stock buybacks, paying out debt, or paying out dividends in which they don't pay any dividend of. So ideally, we would want to see their free cash flow a bit higher, but we can see that it does seem to be alternating between negative, positive, negative, positive, negative. So maybe for the next quarter, we might see a pattern emerge that we are going to see another positive free cash flow. And on a 365-day exponential chart, we can see that the trend lines are projecting this to only slowly increase. We have, of course, had a dip since around November, but we have quickly made up for that dip and we have made a bowl effect here. We are bang on the trend line now, so it could suggest it's not the best time to buy in as we are on the trend line, but with the steady growth, I still think the stock is going to see growth. It might just not be a massive amount according to this. As far as the volume is concerned, it is relatively stable with it spiking massively around, I would say that is the October period. And now looking on a 91-day basis, the trend lines are actually projecting this to go down, which is obviously to be expected as we have seen this bowl effect from November. So I think it is safe to say in this case, I think we can ignore this as the bowl effect has affected this stock and we are now seeing an increase towards the 365-day trend lines. So now what are the figures for new holdings? Well, we have a PE ratio of 36, a 52-week high of 16.15 and a low of 8.58, this being a difference of $7.57. We have a beta rate of 1.11 and the current price is being set at 13.44. So now we're going to look at the intrinsic value for new holdings, and this is where I must say it does look really good for new holdings. So on a earnings per share, obviously it is at 0.37, and we have a growth rate plus the surprise rate of 37% year over year. Very quickly, if you're just wondering how I got that, so I took the surprise rate from the Analysists and I found an average and added that on to the growth rate, just to give us a bit of understanding of where the Analysts could have projected the price to go wrong in the next year. So using Graham's formula here on the left, this is the bullish formula. On the right, we have the bearish formula. So the current price being set at $13.44 is well below the intrinsic value of $28 with a margin of safety at 25%. We can see an acceptable buy price is $21.47, which puts this in at a heavy buy. If we move over to the right here on the more bearish formula, we can see the intrinsic value is $15 with the current price obviously being at 13. We are still massively under that intrinsic value, and with a margin of safety at 25%, this actually prices in at $11, giving us a sell, which is to be expected. That is often the case. However, if we go over here looking at the mean between these two, we see the acceptable buy price is $16 and the intrinsic value is 21. So it does seem to look as if there is a lot of room for growth in this stock, and I would say it is currently undervalued. However, to counter this, we have Peter Lynch's valuation here, which gives us a result of 1.02, which puts us in at fairly valued currently. But this is a very bearish formula, and I often like to think that if it says fairly valued, I would put it as undervalued, and if it says overvalued, I'd say potentially overvalued, fairly valued. So for right now, I'm going to be putting new in at a solid buy for sure. Let's put that all in capitals to make it nice and colourful. There you go. So now let's see what the analysts are actually expecting to see from new. Let's look on MSN. So here on MSN, we are seeing a lot of volatility projected over the next 90 days with a high of $18, which is just below the intrinsic value, and a low of around, I want to say that looks like $10. So on a buy sell basis, they are actually putting this at a buy with a price projection being set at $15 for the start of 2026. Furthermore, when we compare their PE ratio to their peers, they are currently well above their peers. This obviously could be seen as a good or bad thing. It could be seen as a lot of potential being priced into the stock, but it could also be seen as a lot of overvaluation being priced into the stock. However, according to the intrinsic value, we're still not overvalued, so I wouldn't actually say this is a negative thing currently. Furthermore, we are only seeing their earnings per share increase slowly. So again, it is looking really good with them being well below Key Corp, in which is one of their peers. So if you do already hold new holdings or you are looking to hold new holdings, put this date in your calendars. It is February 20th. This is when we can expect to see their Q4 come out for fiscal year 2024. It is on the 20th of February 2025. In my opinion, it is probably best to get in before the earnings report, suggesting it will be a positive earnings report. However, it could go either way, but I think it's more of a higher chance that it will be a positive earnings report for this company. So now we are going to look on TradingView to see if it is actually a good time to buy into this stock. So if we do look on TradingView on a daily chart, we can see that according to the RSI set at 60, we are currently overbought. If we do actually project it to be at 70, we are just barely overbought. However, according to the MACD trend lines, we are now entering into a long position with the lines crossing over just recently, so it could actually still be a good time to buy into this stock according to the MACD trend lines. I do think that we will see this continue to grow slightly. For how long, I'm not entirely sure. And if we do look at the moving averages, we are currently below the 50-day moving average, which will definitely entice big investors to buy into the stock as it gives them a bit of a margin of safety. Furthermore, if we look at the 200-day moving average, we are currently also above that, which is incredibly strong. So if the MACD trend lines are in fact correct, then I do think it probably is a good time to buy into the stock. But I just want to back that up with the Sharpe and Sortino ratio. However, when I bring the Sharpe and Sortino ratio up, we can see that we are actually at minus 17%. So according to the Sharpe and Sortino ratio, the risk to reward isn't particularly great right now. This is, however, on a 5-minute chart. If we do actually remove this Sharpe and Sortino ratio and bring back the MACD trend lines to see it on a smaller scale, we can see that we are just barely in a long position still, with this looking to be returning into a short position soon, which is fair. That is backed up by the Sharpe and Sortino ratio, which actually puts us in at a good point. So I think that can conclude that if you were to buy into this stock, it might be a good time to leave it a week, see what the potential movement is within this stock. I think we're going to see a bit of a downturn in the next week potentially, depending when this video comes out. It's currently the 31st of January, if it depends when you're seeing this, of course, but maybe the next week will be interesting to watch. But I think if you're going to hold this for long term and not try and time the market, I think just buy in. I think it's undervalued currently, and I think it's a good stock to be holding. So that is my conclusion of this stock. I'm going to be giving it a rating of a B. I think there is great growth potential for this stock, and I think it is relatively undervalued currently. Not massively undervalued, but undervalued enough for me to warrant it being a B. So if you have enjoyed this video, please do leave a like, comment, and subscribe. I will see you for the next video. Yeah, that's the outro.